Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Time for a couple of more interesting value stock picks. We're not going to waste any time. Tracey Ryniec, our value stock strategist, here with us to tell us about them. Textainer Group Holdings is one of them. TGH, the ticker symbol, the largest lessor of intermodal containers. I love that word.
Yep.
Intermodal, I meant.
Those are the shipping containers that go overseas. They do the dry bulk mainly, but they're refrigerated, things like that, freezer. This area has been really hot for a couple of years. Textainer is one of the leaders in it. They've been buying a ton of the containers, both to rent out and also to sell. The containers get kind of old and then you have to replace them. So this has all been hot. They've had a couple of really great quarters, and then everyone's now wondering, when is it going to end? It didn't end this last quarter. They also had another really good quarter where they saw revenue up about 45% again. They also raised their dividend another 6%. They've raised it 7 quarters in a row. They pay out a lot of what they make to the shareholders. So that's yielding about 5% here. They had bigger utilization, like 98.6% utilization rate, which in the container world, anything close to 100 is really good. That means you've got them all out there. But they're seeing a little bit of slowdown in what they're able to sell for the rental. The rental prices have come down. They were like at a record high. They've come down a little bit, but they're still at really high rental prices, based on the last 10 years, the historic record. So that was a little bit of fly in the ointment. You can see that the chart, people started getting nervous even before the summer sell-off in the overall market, because no one knows how long can this keep sustaining. But after this earnings report, which is pretty good, the stock is reversed and had a little bit of rally here. It's still pretty cheap. It's trading only a little over 8 times because I think people are still nervous going into 2012. The company sees this momentum through the 4th quarter, but 2012 will be a big turning point, I think, for these container companies. Okay.
Parker Drilling Company, PKD, the ticker symbol, a contract drilling solution provider.
Yeah, they are big in the rental tools. And they also do some project management, all for the energy industry. And the hot area is the shale. So a lot of their equipment is being rented by these companies that are drilling now in all these shale regions. So they had in the 3rd quarter their rental tools segment, which is one of their biggest businesses now. The sales were up 30%. Mainly on the shale. That's not really expected to, slow down here at all. They're also seeing more of their rigs being utilized. So the estimates are really starting to surge here. The company didn't give any guidance. They just said that their end customers are, have some good momentum, aka the shale. So the estimates jumped. The analysts now are looking for 53 cents. They made only 8 cents last year, so that's a huge gain. They see the gains continuing into next year, into 2012, because the shale is hot. The shares are interesting. This is a stock that trades under $10. So it's been pretty volatile, and it's a small cap. It sold off hard in the summer sell-off, but has rebounded a bit. It's trading around 12 times. It's an interesting play if you don't want to actually invest in the energy companies themselves, but want to be in the people who are providing all the equipment and everything. This is where you want to be.
And it's all about the shale.
It is.
Do you own either of these?
I do not.
All right, check out other stock picks on our website, Zacks.com. If you're not there already, you hear me say this all the time, 4 new picks up there for you each trading day, 1 in each of the investing categories that we feature on the website. With Tracey, I'm Terry Ruffalo.